Okay, good afternoon, everybody. You got John Hopkins here. I'm actually in Seabrook Island, South Carolina today. Be here for a couple of days broadcasting. You can do these, one thing great about virtual is really you can have events like this from anywhere. I remember years ago one time when I first started the business, we'd rent a hotel, get a room, get the screens with the projector, have snacks, have lunch. It was an undertaking. I got to tell you, this kind of a setup works well for us. And thinking back on it, even back then, in the old days, having people sitting at computers and looking at the charts was really really a superior way to teach this stuff. So here we are, caught up with the future. Anyways, I'd like to welcome all of you to today's event. I know we have a lot of people on trial, some people who are not on trial, who are just stopping in to check us out, and a lot of our seasoned veterans as well. We have members who've been with us since we first started back in 2004, which is pretty awesome. Really thank you for your support over the years. I'm going to be very brief this morning. You got John Hopkins here. Tom Bulley going to jump in just a minute. Want to let you know that every webinar is recorded. Matter of fact, we have quite an archive of recorded events, and this will be recorded as well. So if for some reason you can't stay for the duration, no sweat. When everything's edited, put together, we'll make sure you get a copy and you'll be able to look at it anytime you want to. Today, we're going to be talking about the research engine at EarningsBeats.com. As you'll see, we've gone from a one page, when we first started, like a one page email, to very extensive set of services that we offer to our members. And Tom today is going to take the time to explain how these work so you can get the most out of it. Anyways, I know there's a lot to cover, so I'm just going to step aside. I make sure Tom's ready to roll here.
I am ready to roll, and I just want to announce we are serving lunch for everyone, but you have to go into your own pantry and refrigerator to get it.
I'll tell you, man, there were some heavy-duty costs back then for that room and that, the buffet and everything that went along with it, but it was awesome. That's how we got our start. But this is a wonderful way, really, to connect with a lot of people.
Yeah, you brought up some memories, though. I remember, getting that cookie tray out, and it'd be like a $60 charge for like 20 or 15 cookies or something.
I forgot about it. I used to tell Diane, let's try to keep the 2 dozen, and then I'd make sure I slipped one in before anybody got there.
Yeah, watch for all the heavy hitters.
I'm paying $60. I'm getting a cookie. Anyways, I know there's a lot to cover, so I'm going to go ahead and step aside, and hope you have a great event here.
All right, appreciate it. Thanks, John. Yeah, we've got a lot to go over today. I'm going to try not to take too long. I know, some of these webinars can drag on, and I could talk about the market forever, and I know there are a bunch of you here who probably could listen to it forever. But it is Saturday, but this is just a good time. Sometimes it's great to have these webinars on the weekend. If, for any reason you need to walk out, it's being recorded, so you can always come back in and check this out later. So if I do go a little bit longer or whatever and you need to run, don't worry about it. We do have you covered with the recording. But, it's still nice to sometimes have one of these webinars when the market is closed, just because there's nothing else going on. There's no other distractions. And we have made so many changes and so many additions to our service over the past year. And we were starting to get more and more members that were asking about what to do with this chart list, or how was this chart list created, and what would you do with this scan. And so it just got to a point where it just makes sense a lot of times, rather than responding to individual members, to have a webinar. And so this is going to be a great opportunity, I think, for those of you maybe who are new to EarningsBeats to get a sense of what we do. Hopefully after today, you'll have a really good sense of it. And for those of you who are on trial, maybe still, going through the website, figuring out everything and what we do, I think this will be a pretty good webinar for that. And then many of you who've been with us for a while, I think maybe there will be a refresher, maybe there'll be a couple of tidbits that I go over that you weren't aware of, or maybe some different thoughts and different processes, ways to address the market, look for trading opportunities or investing opportunities that maybe you hadn't thought of before. So that's the whole purpose of what we're going to do today. It was literally 1 year ago this past Monday when we had our sneak preview for the Top 10 Stocks event. That was the 1 year anniversary when I announced that I was leaving Stock Charts and returning back to EarningsBeats. And honestly, I don't regret it. I think if somebody had told me then that we were going to have a pandemic and the market was going to get hit 35% in 4 weeks, I would have probably said, let me just stay here at Stock Charts. Not a great time to go out, back to EarningsBeats and try to build a business with a pandemic. But as it's turned out, I think that we recognized some things pretty early in that pandemic. I think that we were able to help a lot of our members. And so I think it's really been a win-win for everybody over the course of the last year. Wanted to just start off because I did come back a year ago, and there's so many of you that supported me in this move back. A lot of you that followed me daily at trading places, at Stock Charts. Maybe that's where you first learned about me. Maybe you followed me for years and then finally came on board when I came back to EarningsBeats. Whatever the story is, I just want to thank all of you because it has been quite a year. Our membership is at a high, which is awesome. We owe a lot of that to Stock Charts. Stock Charts is a great partner. Of course, I've been using Stock Charts now for 15, 20 years. I don't even know what I would do if I didn't have Stock Charts in terms of my trading. Because this has now been a year and we got a lot of folks, a lot of you who started with us a year ago, maybe signed up for an annual. We are running a special right now to coincide with this anniversary. So I just want to start off, just make sure everyone is aware of what we have running there. So just pulling this up on the screen. If you're at our website, you can click on this webinar special and it'll bring you to this page. But this was originally designed to run through today. Today was going to be the last day, but we've gotten some emails from some newer members that want to have a little bit more time and have asked us if we would just extend it a little bit. So we're going to go through Monday. So we will go through the 17th, give you a couple more days. Those of you maybe are learning about EarningsBeats for the first time, we have a free, it's a no-cost trial. It's a $7 30-day trial, but we refund you the $7. So with this special running and now extending it through Monday, if you haven't tried our service and you like what you hear today, then maybe you might want to give it a shot and just see what you think, because this will end on Monday. But it's the annual membership. Normally, you pay $97 a month. When your trial expires, you pay $97 a month. So 12 months of that would be $1,164. With this special 2-month bonus, that's another $194 value at $97 a month. So the total for 14 months would ordinarily be $1,358. You can see there it's about a 50% savings, nearly 50% savings, $697. And if you're on trial, you get the 14 months at the end of your 30-day trial. So if you've been with us for just a few days and you say, well, I want to jump in on the annual, you'll still get the rest of your trial period, and then you'll get 14 months on top of that. So I just want to be clear there. But I think it is a great deal, and really just want to thank everybody for supporting me and supporting EarningsBeats over this past year, and even going back way, way, way beyond that. But here was the article that I was referring to over in Trading Places. So this is when I announced it back on August 10th, 2019. I had a vision for what I wanted to do at EarningsBeats, but I tell you, it's been evolving as we go. Had no idea the pandemic was coming, so we ended up creating a couple of chart lists out of that pandemic, the strong AD chart list and the weak AD chart list. I'll talk about that a little bit later. But just as the markets evolved and as our businesses evolved, we've been trying to add more and more and better products and services to our lineup. And so it's just after a year, I think it's time to just sit down and maybe take a deep breath, collective deep breath, and take a look at some of the things now that we have at EarningsBeats. Make sure that you're getting the most out of your membership here. Also, I wanted to mention, if those of you that have been following me at Trading Places for a while, if you go back before I made the announcement, this was a typical article for me. And I used to publish every morning at Stock Charts. That was part of what I did as senior technical analyst there. I had told Chip Anderson, gosh, probably 5 years ago, it was back in 2015, that he wanted somebody to write something in the morning every day about the market. And so I said, I'll do it. And it was just easier for me. I was on the East Coast. Some of the other contributors are out on the West Coast. So to try and get something out before the market opens, out on the West Coast at 6:30 in the morning. So if you wanted to publish by, say, 6, you'd have to be writing at 4 o'clock in the morning. So it just didn't seem right for somebody on the West Coast to do it. So I volunteered. And this was the type of thing that I had. So I had a market recap, pre-market action, current outlook, sector industry watch, historical tendencies, key earnings reports, and then key economic reports. And for those of you who have been members for a while, we now have a daily market report. And in my view, that was kind of like the replacement. So instead of having this daily blog article that was going out every day at Stock Charts in my Trading Places blog, now I only blog, write a blog article maybe once or twice a week there. And this daily synopsis is now our daily market report. And so before we get into everything else today and go through the agenda, I just wanted to point that out to everyone. So now the daily market report, here you can see under the members when you're in our EarningsBeats site. This is basically where you're going to find just about everything is under this members area on the left navigational panel. You've got the daily market report, weekly portfolio report. I'll pull that up a little bit. Our chart lists, our scanning strategies, our portfolios, all the webinars John mentioned. We've got webinars. We've got all the recorded webinars here with links where you can go back and listen to them if you want. And then our free EarningsBeats Digest newsletter. So all of that we try to put in one area of the website so you can find everything pretty quickly. But now our daily market report is what you see. So normally if there's any special announcements, like I wanted to mention the annual membership, special Saturday event, but normally it's just going to start right there with the executive market summary. So somebody who's at work doesn't have a whole lot of time, may just want to take a quick look at that. And then if they have time, kind of glance through the rest of it or whatever. Just wanted to try to give you some quick bullets as to what's going on. We've got the market outlook. We've got the sector industry focus. And you can look at something like, we try to make it educational at the same time as informative. So for instance, here I was talking about real estate. I don't think there's any doubt real estate now coming off that March low is in an uptrend. So you might think, hey, that's great. I want to jump into real estate. Until you get down to the bottom here and you see real estate relative to the S&P 500 is just falling through the floor. And in fact, just set a new 52-week low. It wasn't Friday. I guess it would have been on Thursday. So yes, it's going higher, but it's going higher at a rate that's slower than the S&P 500. So if your objective is to beat the S&P 500, real estate's going higher. Your account might go higher if you're in real estate, but it's going to be much more difficult to outperform the S&P 500 if you're investing in real estate companies, simply because it's like swimming against the tide. You've got real estate on a relative basis going lower. So it's those types of things that we try to point out. If something looks technically significant to me as I go through and look at the market, I try to pass it along. Then I normally will go through the chart list. Sometimes I'll show you a scan and I'll show you the syntax that I run in order to come up with certain candidates. And then maybe I'll highlight a few of the charts. In this case, I just went through our flagship strong earnings chart list, which I'll talk about in a little bit, and just pointed out, I had a bunch of charts I went through on Friday. I mean, there's Morgan Stanley. And you'll almost always see these relative strength panels beneath the charts that I show, because it's not enough that a stock is going up. I want to know what it's doing relative to its peers, relative to the S&P 500, because for the most part, I want leaders. I want to be trading leading stocks and leading industry groups. So there you have that. Then we had F5. F5's just been going sideways and consolidating for a while. And since making this high, this move up right here from March through April, the stock nearly doubled in a month. It was doing extremely well. And you can see relative to the telecommunications equipment group, it actually broke out here to a new high. But when a stock consolidates, like this one's been doing, then you see the relative strength go down. So it's just those types of things. You know, eBay, I think, starting to look better to me after sideways consolidating for a period of time, or actually even selling off a little bit. Rockwell Automation, beautiful move up, nice little cup back into a handle to the 20-day, and it looks like just broke out with volume picking back up again. Wanted to point that out. CRTO, this is on our raised guidance chart list. They've raised guidance twice in the last quarter and got a beautiful move up, and I see an ascending triangle, which I think is very bullish. So as I went through, I just wanted to point out these charts that just looked interesting to me, and not always ones that are going up and breaking out. I mean, here at Lacey and Corp team, software has been pulling back. Software, I think, could be presenting some really nice opportunities. And so as Atlassian pulls back, I mean, we just broke out above 155, recent lows 160. So the stock was up near 200, and now all of a sudden, a month later, we've got an opportunity here. So it's just things like that that I want to pass along to our members. Some might look at team and say it's too volatile. I don't want any part of that. Others might look at it and say, hey, this is my kind of stock, and I love software, and so therefore, you know, maybe I want to jump right in. It's just ideas. We're just literally throwing ideas. Then you see earnings reports here and economic reports. So very similar setup to what I used to do every day at Stock Charts. Now I'm doing it every day for EarningsBeats members with a lot more charts. That was the other thing. When I used to write any of my blog articles, you know, it was never really, I'm not gonna say it was frowned upon, but it wasn't, I didn't feel comfortable putting too many charts in one article and making the blog articles real long. But now I don't have any problem. I mean, if I've got the time and, you know, there's a lot of charts to show, then many days I will just go ahead and just put a ton of charts in to give you an idea of what we do. So I didn't really want to spend a whole lot of time on the daily market report, but I did want to just draw that parallel so that you know that what I used to do in Trading Places in that blog every day, now you're getting it over at EarningsBeats. Now, before I get into the rest of this, why don't we pull up the agenda and just go through, because I really want to talk about some of the things that we're going to be focused on for the rest of this webinar. I definitely want to get into the portfolios. I talked about the sneak preview on Monday. I'm not going to spend as much time on the portfolios as I am the chart list, but I want everyone to at least be aware of what they are and how we create them and what, you know, I think what our members could use them for. They're not for everybody, but we'll get into those in just a minute. Chart list, I want to spend probably more time going through the chart list. I want you to know how these get created. We do a lot of research. And when I talk about the research engine of EarningsBeats, it's really these chart lists. This is where, you know, I mean, you can get a chart list of anything. You can go to the, you know, download the S&P 500 into a chart list there. You have a chart list, S&P 500 companies. But we put our own personal spin and our own technical analysis and review into these chart lists. Some of them are annotated chart lists. Others are just put together a certain way, maybe based on certain key relative strength levels and so forth. But when I get into the chart list, I think you'll see that's really where I think our research comes in. And then we'll get into scanning. We've got, you know, if you look over here on the, well, I'll go back to it in a minute, over at our page that I was showing you under the members, all the different services, one of them is scanning strategies. And so I've just written, you know, 5 fairly basic scanning strategies that I use a lot. And I just wrote the syntax for them and included them in our website. So if you're a Stock Charts member, you literally can just go over and copy the syntax and then go into Stock Charts. If you're not familiar with how to use the scans, we basically do it for you. And I'm planning to add some more scans as we go forward. Maybe once we get past the top 10 stocks and the portfolio selections, that might be more of a focus when we get into the latter part of August and into September, is creating maybe a few more scans that I think many of our members would enjoy. And definitely would pull up some additional trade candidates that you might find very tempting. And then we're going to wrap up, just talk a little bit about regular webinars and events that we do for our members all the time. And we have, this is a free one. I wanted to, at least give those who are not EarningsBeats members an opportunity to at least see what we do and what we have to offer. And then you can make a little bit more of an informed decision about whether you think this could help you. But we have regular webinars throughout the calendar month and quarter that we do, and we put it on a calendar, and our members are able to plan for those. So we'll talk a little bit about that. So I'm going to go ahead and jump in. I want to go back. I'll show you the scanning strategies just first where you can find it. I will take Q&A at the end. I know John will probably answer some of the Q&A that you have, but if there's some other questions that you have about the website, I will try to answer those at the very end. I do want to avoid looking at individual stocks. I mean, I look at individual stocks all week long. I really don't want to spend Saturday doing it again for, a period of time. But if you have questions about anything I talk about today in terms of the services we offer, love to get those questions and try to get you pointed in the right direction there. All right, back over to the EarningsBeats website. And I just want to point out the scanning strategies right over here under members. That's what I was referring to. So if you go into scanning strategies, and I'll go through this later, but you can see some of the scans that we run along with the actual syntax that you could use, and literally just copy, go over to stock charts, paste, and run your scan against one of our chart lists. And I'll be talking about how you do that later. Okay, let's go into portfolios. So what I wanted to do today is, and before I even get into the actual portfolios, I do a weekly portfolio report that goes out to members. And you'll find that under the members section right here, EB Weekly Portfolio Report. This is the latest one. If you wanted to go see the one before this, you just scroll to the bottom and just go to next. So there you've got August 2nd. The one before was August 9th. So this comes out every Sunday. It's a regular part of our service, just like the daily market report is every day that the stock market is open. If the stock market's closed, you're not going to hear from me. But if the stock market's open, you will hear from me. But in this weekly portfolio report, I'll tell you if any of our portfolio stocks, any of our stocks in any of our portfolios is reporting earnings upcoming in that week. And so that'll at least let you know. Some of our members will use these portfolios to trade. Some of them will buy them at the beginning when they're first announced. They'll hold them the entire 90 days, and then they get out and they get in the next ones. They just religiously follow the portfolios. I do want to say, and this is extremely important, I am not a registered investment advisor, and you can see that down here. We put it in every single one of these portfolio reports, but I'm not a registered investment advisor, and EarningsBeats is not a registered investment advisor. We cannot give you advice as to what you should buy and sell. First of all, you shouldn't rely on us to give you great advice in that regard, because we don't know your financial history. We don't know your background. We don't know your goals, your objectives, what you want to do out of life. We don't know where you are, whether you're retired, whether you got a lot of play money that you're investing, or whether this is, your nest egg, or whether you're saving for kids' college they're going to start college in 3 years. I mean, there's so many questions that a registered investment advisor, as part of a solid financial plan, would want to know. We have no way of knowing all this information for all of our members. So I don't want to sit here and say everybody should just jump into the model portfolio or the income portfolio or the strong AD portfolio. I will explain to you what they are, and you can do what you want with them. The reason that we started the model portfolio back in November of 2018. And the whole reason that I started it, besides the fact that members were asking from the Strong Earnings chart list, where there were 300 companies, they were like, okay, can you narrow this down to maybe your top 10? So that was kind of one of the reasons why we started it. But the other reason is simply to document the performance of following leading stocks in leading industry groups. That's what I always talk about. That's what I try to do. And if I'm trying to beat the S&P 500, I want to be in stocks that are beating the S&P 500. I want to be in stocks that are in industry groups that are beating the S&P 500 for the most part. There are exceptions. I do have some stocks that I really like I mean, Chipotle has been a huge winner now for several quarters. It's been a great company. For a while, restaurants were doing really well. During 2020, they haven't. But CMG, Chipotle, and Wingstop, WING, have continued to perform really well, even though their groups haven't. So there are exceptions, but for the most part, you want to be in really strong areas of the market, and you want to find the best stocks within those groups. So anyhow, we have these rules and objectives. These are in here every week. I just leave them in here. I don't know who looks at them when. I just want to make sure that they're there and everybody can kind of look. The way we track these portfolios and our approach to these portfolios is that they are buy and hold, but they are buy and hold for 90 days only, 3 months. So it's really buy and hold theory meets trading theory, and we kind of meet somewhere in the middle, because buy and hold, you're not trading in and you're not doing anything every 90 days. You're buying and you're holding. But I don't think that's a great strategy because the market rotates. So yeah, I mean, one quarter you might be in, I don't know, you might be in toys, and maybe the toys are great that quarter. But then if you stay in and toys start to underperform the S&P 500, that part of your portfolio starts to go down, that piece. And so what we do is we simply reevaluate the market every 90 days, look for the best performing groups, best stocks within those groups, and redesign our portfolios based on that, with the idea that if we get into leading stocks and leading industry groups, we have a much better chance to outperform the S&P 500. So as we go through this report, I do a weekly snapshot just saying what the S&P did, what our portfolios did just for this particular week. And then usually I'll talk a little bit about it, maybe what caused our either outperformance or underperformance, talk a little bit about the S&P 500. I'll go through each of our portfolios. I always show the inception to date chart for each of the portfolios. So the model was started in November of 2018. And you can see this is actually updated through last week on our website. I think right now we're at like 118 and change or something through the 14th, which was yesterday. But you can see, just using this one from last week, 118% versus 24%. To me, model portfolio is documenting that this strategy works. Does it work every week? No, I just showed you we lost versus the S&P 500 last week. Does it work every quarter? No. Model portfolio right now, this will be the 7th quarter that ends on Wednesday, and we will have beaten the S&P 500 6 of the 7 quarters. One quarter we fell, I think we lost about 7%. We were 7% under the S&P 500. There were a couple of quarters we were just about in line, but we beat slightly. And then there have been about 3 or 4 quarters where we've had really good quarters, and this is one of them. You can see here, I mean, we just absolutely, May 19th was right here. This is when we picked. So you can see model portfolio has gone straight up since May 19th. May 19th here, you can see we struggled on the S&P 500 for the next 30 days and then finally started to move. But the model portfolios continued to do very well. Then I show you all the stocks in the model portfolio, and this is a 1 week. It's a 1 week to date chart. So it just shows you how each of the stocks within the portfolio did that week. And then sometimes I'll have a chart like ZYXI is definitely one that's struggled recently. And when I look at this, we've lost that 20-week moving average, and we made a breakout around $14. I mean, this was one that maybe it goes down to 14. I don't know. But inevitably, we get members that'll write to us and say, "What should we have stops in play?" Listen, you can do whatever you want with these. You can have stops in play. You cannot have stops in play. You can trade them. You can take part of the model portfolio and maybe part of the aggressive portfolio. You can do whatever you want. But this is what we do. We buy and we hold. 90 days, no stops. At the end of 90 days, we take everything out. We figure, okay, what do we want? Now, some of these stocks, they've been very strong this quarter. I would say there's a good chance that a handful of these, maybe a few of these at least, will be in the model portfolio again next quarter because they've been so strong and they still remain leaders. So I don't want to just pull them out just because we used them last quarter. If they're still working, we'll stay with them. But then I just go through all of them. So there's the aggressive portfolio to date. You can see 45% since May of 2019. So this has only been 15 months. up 45%. The S&P over the same period, 17%. And again, that's as of last week. Everything else will be updated on Sunday for this week. Then we've got the income portfolio. This has been the weakest one for sure. And it was really this quarter right here that did it. We were into some defensive stocks, financials, real estate, but those were the stocks that got hit the hardest during the pandemic, which was not good. I mean, I actually wanted to be a little bit more defensive with the income portfolio. And I thought if we had a pullback, that would actually help the income portfolio outperform, but it backfired because a lot of the defensive groups got hit harder. I mean, technology was one of the best areas, but if you think of a cyclical bear market, going into it, I would have said, I don't want to be in technology, but that actually was the best area to be in. Anyhow, that was the income portfolio. And again, there's the stocks. And then finally, we have a strong AD portfolio. And I'll talk about the AD. AD stands for accumulation distribution. So started this is the first quarter. So you can see for the first month, it went nowhere while the S&P 500 was going up. But then the S&P struggled for the next month, actually went down, and strong AD took off to the upside. And so right now we're up, as of last week, 19% versus 14%. I think that difference is still fairly close. I think maybe we're 3% higher or something like that. And then a summary. We'll do a summary at the end. So that's the weekly report that you're going to get every week. So if you follow the portfolios, it's not like we just put them out there and then wait 90 days and come back. I'll talk about them every week. So if you do want to trade them, you'll have a little bit more information. But it's really designed, and the way we track it is based on buy and hold. But every 90 days, you're swapping out and going with new leaders, or maybe some of the same leaders. Now, the other thing I want to mention on portfolios before we move on is I just wanted to go through and show you that on the portfolio page under the members, you can come in here and get some more information. So this is the, just kind of went through and mentioned some of the commonalities of each of the portfolios, so you could certainly read through that. But I've got each of the portfolios. So we've got the model, the aggressive, income, and strong AD. We had an old character change portfolio, which was really designed to try and capture stocks that were in downtrends, reported earnings, and then came up into an uptrend. We did it for 2 quarters, and maybe the timing just wasn't great because our second quarter was during the pandemic, and it actually held up okay. Basically did what the S&P did in the last quarter, but the first quarter was not very good. It was flat while the S&P was up 8%. So just after those 2 quarters, I was like, I'd rather do the strong AD, because that's one of the things that I had spotted back in April, late March, early April, that many stocks were being accumulated even though their prices were going down. But again, I'll talk about that a little while later. But you can come into each one of these, like the model portfolio, and you can go back through the results on every quarter. So the first quarter, you can see we crushed the S&P 500. That was during the trade war. Remember December of 2018? The S&P during that cyclical bear market went down 20%. We started this, the model portfolio, we started right before we had the huge drop in December of 2019 or 2018. Figures, right? And then we had a pandemic in 2020. So the 118% that we're currently showing on the model portfolio includes 2 cyclical bear markets in 21 months. And we've still been able to put those kinds of numbers up, which I think is pretty amazing. We're certainly proud of those results. 2019, this was the February 19th to May 19th quarter. See, there was just a slight outperformance, 3.55% to 2.87. Next quarter, about 11 percentage points higher. So we had a good quarter there. The upcoming quarter that we're getting ready to go in was the worst performing quarter. It was last year's August to November quarter. And it always makes me a little nervous because August and September are the 2 worst months of the year historically for the market. So I think, growth stocks tend to maybe struggle a little bit. We'll have to, I'm trying to keep that in mind as I work my way and my vision of this next quarter. That might have a little bit of an impact on how I put this portfolio together. We'll see. Still thinking about that. November through February, you can see just 0.5% higher. So it wasn't like we crushed it that quarter. Now, 2/19 to May 19 during the pandemic, this was huge. We actually made money in this portfolio, 4.6%. The S&P lost 13 2/3%. That was over 18 percentage point difference. And this quarter, these are the stocks that we have in here. This is what we bought them at back on May 19th, and whatever they are, August 19th on the close will be generally And the whole idea, the whole concept of these portfolios, 10 equal weighted stocks from generally 10 different industry groups. Now, in the model portfolio, and I announced this back in May, we actually put two software stocks in there. So if you look, we have CDNS, Cadence Design, and we also had Shopify. Both these stocks did very well, but I really liked software going into the last quarter. And so I wanted our model portfolio to have a little bit more representation, but rather than put 20% into one stock, I just picked two different software stocks that I liked. And so they did pretty well. But again, if you're looking at these, you don't, just because we do something and we put 20% in, doesn't mean that that's what you have to do. I mean, we're not going to hold your finger down to the buy button on any of these. You do what's comfortable for you. But we are trying to build a track record. And I think it's just as much educational as it is, to build everyone's account. I mean, I just want everyone to see in real time how you can approach the market using relative strength and strong fundamentals. All of these stocks in the model portfolio come from our strong earnings chart list. And I'll go over that when I go through chart lists in just a minute. So that, for the most part, is what I wanted to go over with these portfolios. I will say that our next draft, I call it the draft. And the great thing about this is, if you look at the NFL draft, if you don't have the number one pick, you don't get Burrows from LSU. It's not like everybody can draft Burrows. It's whoever has the first pick gets Joe Burrows from LSU. So the Bengals had the first pick in the NFL draft, and they got him. Now, I'm a Washington Redskin fan, I guess Washington football team fan. And we had the second pick. We don't get Joe Burrow. He's gone now. We only can pick from what's left. The beauty of the draft for stock market is just because somebody else buys Apple, that doesn't mean we can't buy Apple. We can buy Apple. We can buy Amazon. We can buy Tesla. We can buy the top 10 stocks. We can look out over all, 8,000 stocks or however many stocks there are now. I don't even know how many stocks there are anymore. But we can look out over the entire market and we pick out the 10 best. It's the draft, but we have the top 10 draft picks. That's pretty cool when you think about it. And so if I can pick 10 of any of all the stocks out there, if I can pick my 10 favorite, I should be able to beat the S&P 500 over time. S&P 500 is just an average of 500 large multinational companies. I should be able to find 10 that are exceptional performers that I can beat the S&P 500 with. And so I always refer to it as a draft. Anyway, that's coming up on Wednesday. You do have to be at least a trial member at EarningsBeats to attend that. And you can, go to our homepage at earningsbeats.com and you'll see on the right-hand side, there'll be a green button where you can join. I would highly recommend, just check it out, 30 days. It'll cost you nothing. You get hit with a $7 charge when you sign up, but it's a free trial. I mean, it'll be refunded to you. So it's free. We do that just to get you set up in our system. But you have 30 days for free. And if you're not a Stock Charts member, they have a 30-day free trial. I would highly recommend you put two of us together and try us both for 30 days at no cost and download our chart list into your account. I want to show you how to do that in just a few minutes. And follow these portfolios, and you tell me if this doesn't make a difference. I believe it'll definitely make a difference in how you approach the market. It may not change your strategy. You may be very successful in the market, which is great, but we might be able to add to it. There might be a little, I don't know, just a little something here or there that you can just maybe adjust what you're doing based on something that that we talk about. And maybe that'll just take you to another level. All right. So now one other question that comes up on the portfolios is because we get in, I look all day. I normally don't pick these stocks. I have a general sense of a lot of the stocks I want. And I already have a general sense of a number of the stocks, but I don't actually go through. I do a matrix So I set up all these different stocks I'm interested in, and I got the portfolios going across the top. So I got stocks coming down the left side, portfolios going across the top side, and then I know which industry groups that I want represented. And then I just start plugging in the pieces. I will say that generally speaking, my favorite stocks go into the model portfolio. And that's how it was created to begin with. Members wanted to know, what are your 10 favorite stocks? So that's how the model portfolio was created. Now, occasionally, like last quarter, Apple was in 2 of our portfolios. I put Apple in our model portfolio, but it also pays a dividend of almost 1%. And so I actually put it over into our income portfolio as well. But of 4 portfolios, we had 39 stocks in them. So all the portfolios, other than that one common denominator there with Apple, every other stock in all the other portfolios was, they were all different. So when I go through and I look and I pick all of these stocks out on the 19th, whatever the close was that day, we announce it to everybody at 5:30. We're going to have our webinar starting on Wednesday at 5:30. So I will immediately, I might have a few things to say about, how I picked and what I was looking at and so forth. But for the most part, the draft is going to begin pretty soon, right after 5:30. And all of the stocks that go into the portfolios will be priced at Wednesday's close. And I've had members write in and say, well, we can't get them until Thursday morning. Well, let me just say this. First of all, I'm not going to put anything in there that announces earnings after the bell. I mean, I'm not going to say, oh, I'm going to get into this stock at $22, but they just reported, now they're $30 after hours. You all can get in at 30. We don't do that. For the most part, I think that you're probably better off. I think the results would be even better if I got in the next morning, to be honest, because the 19th to the 25th, if you're not already aware of this, historically is the worst period of the calendar month. Since 1950, we've had almost 4,000 trading days that fall between the 19th and the 25th of all calendar months. 4,000 trading days. That represents about 14 years worth of trading days. Do you know what the annualized return of the 19th to the 25th is? Minus 8.78%. If I told you today that for the next 14 years, the S&P 500 was going to go down on average almost 9% a year, that would be worse than any secular bear market in our history by far. And yet it happens all the time. It's right here. It's the 19th to the 25th. People don't realize it, but that's one of the reasons why we do our Max Pain webinars, which is, I'll talk about later, but that's a regular webinar we do for our members. Max Pain is we do it on the Tuesday before options expire on Friday. And that's always the 3rd Friday of the month. Guess where the 19th to the 25th usually falls? Usually either right at when options expire or it's the week after options expire. And so there is a lot of financial interest of market makers for prices to go down the 19th to the 25th. And down is exactly what it does. Minus 9% annualized average return. That's the annualized return of all days from the 19th to the 25th of all calendar months since 1950. I think that's one of the most amazing stats that I ever uncovered, I think. So how often do you think I want to trade stocks and buy on the 18th or 19th? We're buying our portfolios on the 19th. And some have said, well, why don't you just wait till the 25th? We could. I haven't gone back and looked. I'm sure some of the stocks, it would have been much better. I know that there have been some stocks it would not have been better because these stocks are leaders and they don't always fall when the market pulls back. So again, whether you want to buy on the 19th, the 25th, the 23rd, the 16th, do whatever you want with it. I'm just trying to give you the information, and I think very useful information. So I think that you've got opportunities probably to get into these stocks cheaper than we get into them. But for consistency purposes, I'm trying to keep this as simple as possible. We get in on the 19th of August. We get out on the 19th of November. We get in on the 19th of November. We get out on 19th of February. We get in on the on 19th of February, we get out on the 19th of May. That's the same cycle every quarter. And no stops. We will just hold. Again, you do whatever you feel is most comfortable. So anyway, that's the portfolios. So got through that. I want to move into the chart lists. And I guess first thing I want to start with is, let's just go to the area of the website where the chart lists are found. So we got strong earnings chart lists leading off here. They're basically 6 chart lists with individual stocks in them that are regularly updated or that are just part of our standard service. We have the strong earnings chart list, which is right here. This is a chart list where I do a lot of research. I cannot even begin to tell you how many hours I pour into this, but I look at thousands of earnings reports every quarter. The only way a stock gets on this chart list is if it beats Wall Street estimates as to both revenues and earnings per share. It has to beat. I don't care if they match. They don't, that's not good enough. I want companies that are beating estimates. And, you know, some said, well, what if they match, but then they raise guidance? Well, we have a separate chart list now for raised guidance. In this chart list, you must beat top and bottom line first to even be considered. That doesn't get you on it, on the list. That just gets you considered. That's first filter. Then we look at liquidity. So if you got a stock that's, you know, they just blew out earnings, the chart looks great, but trades 2,000 shares a day, gone. Got to trade at least 200,000 shares a day on average. And if it's a smaller stock, like $5, $6, $7 stock, I want to see more than 200,000. I mean, if it's a $5 stock and it's 200,000 shares a day on average, that's only $1 million in dollar volume. Now you might think, well, still $1 million is a lot. Not in the stock market, is it? That isn't anywhere close to being a lot in the stock market. That's, you know, the proverbial gnat on the elephant. That's not much in the way of volume, or much of in the way of dollar volume. So it just depends. You know, there's a little bit of judgment that goes into it. So I try to look at it. If it's looks like it's about 200,000, it's a low dollar stock. A lot of times I'll toss it. But if it's a $1,400 stock and it trades 200,000 shares a day, then I'm fine with it. I mean, then that's a lot of money that's changing hands each day. That's much more liquidity. So it's not just the number of shares. There's a little bit of judgment involved there. And then I look at the charts. So they beat top line, they beat bottom line. On the chart, I see that the volume's okay. And then I want to look, all right, what's the price action? What kind of response did we get with earnings? If you get a stock that was trading at 20 and it gaps up to 25 with its earnings, that's a positive. Market obviously responding very positively to that report. Now that stock might open at 25 and close at 15. Okay, well, now it's not so good, but it might open at 25 and finish at 30 on volume that it hasn't seen in 5 years. That is extremely bullish. So it's just a, you know, it's my opinion as I go through. It's my judgment, what I want to include, what I don't want to include on there. But right now, we have 326 companies. I can tell you we haven't updated it since, well, the date it was updated was August 4th, but I think it was through companies that had reported earnings as of July 31st. So we've got the last 2 weeks. I'm actually going through those right now, and I'm going to be spending a lot of time this weekend because I really want to try to update this and have this out on Monday to everybody. I have to have it for Wednesday. I have to have this strong earnings update done before I pick my portfolio stocks because they only come from the strong earnings chart list. So I got a lot of incentive, and I will be getting this out to everyone. Hopefully Monday, Tuesday at the latest. So that's the strong earnings chart list. Okay, if you're a member at EarningsBeats, you can download, and you're a member at Stock Charts. You got to be a member of both. We have no affiliation with Stock Charts other than just having a great relationship. I write at Stock Charts. I do shows at Stock Charts. We do a lot of marketing at Stock Charts because that's where a lot of folks have been following me for years. But we have if you are a member of EarningsBeats and you go sign up for Stock Charts, we don't get a penny of that. We have no financial relationship whatsoever with Stock Charts. So, and that's a question we get sometimes. You know, if I join EarningsBeats, do I also get the membership at Stock Charts? No. Get our free trial, get their free trial, see if this works for you. I can tell you that if you're not a member at Stock Charts, I'm going to pull this strong earnings chart list up here for you. I don't think it's going to ask me for the password because I've already downloaded it, but let me just copy this just in case. Because the first time you go in here, you're going to have to, when they ask, they're going to prompt you for a password. This is the password. We give it to you after each chart list. So make sure, you know, you note that. It's not your EarningsBeats password to log into your account. It's not your Stock Charts password to log into your account. It is this specific password that we have next to each of these chart lists. So I just copied it. Now I'm going to go over here, and it's not asking me for it. Right here is where you would be prompted for the password. Now, if you're a member at Stock Charts, you can save it to a chart list. So when it gets updated, I could simply just come in here and say replace list, and then go down to wherever you've got your strong earnings chart list, pull it up, and when I hit click, if I click save results, it will overwrite, and I can literally just do this in seconds from the time you're at the website and click on the, you know, highlight that password, copy it, come over here, and you go in to download it and save the results. It'll take you about 10 seconds for each chart list, maybe not even that long. Now, if you're not a member at Stock Charts, what you are going to see is not this, because you can't save it to your chart list. You're probably going to see ads, and you can still go through all of these charts, but you've got to do it one at a time. Well, if you got 326 charts here, and I've got all these relative strength panels below, I mean, you can look through them, but it's going to be pretty tedious to go through and look at 326 charts. And then, you know, you get halfway through and you're like, what was that one? And then you have to go back and search through and try to find it. This is going to save you a lot of time, a lot of effort. It's going to organize your account at Stock Charts. Just be a member. I can't imagine not being a member at Stock Charts and approaching the stock market. I think it's the best financial website anywhere. But, well, maybe other than EarningsBeats. Okay, so that's the strong earnings chart list, and that's how you get into it. I mean, that's how simple it is. I do all the research, and I'll pull up the chart list and show you what we do in just a minute. But I do all the research. I annotate this one. This is an annotated chart list. I usually look for 1 or 2 key price support levels, which I'll put right on the chart. So when you download it into your account, all the annotations are there. All right, so that's the strong earnings chart list. Now I'm going to scroll down. I'm going to go out of order here a little bit, order I like to follow. The next one I want to do is strong future earnings chart list. Now, the difference here is that a strong future earnings chart list is not based on the prior quarter. In other words, you don't have to have beaten Wall Street estimates in the last quarter to get on this chart list. This chart list is independent. It's based solely on technicals, has nothing to do with fundamentals. So why do I say future earnings? Well, that's what Wall Street does. Wall Street goes out, they meet with companies, and if they like the company, what the company has to say, they come back and they buy it for their own accounts and for their client accounts. And so you start to see really strong, you start to see relative strength on many of these companies. As Wall Street feels more comfortable about them, they will start buying. They don't wait until the report comes out. There's actually a quiet period that once a quarter ends, Wall Street analysts can't go out and talk to management. It's against SEC rules. So if you've got a company that just finished its April 1st to June 30 quarter, Wall Street analysts can't go out on July 10th, a week before the earnings report comes out to find out what's going on. They have to be done by June 30th. So that's why many times you see the fundamentals, you see companies going up, 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 and then you're like, why are they going up? Their earnings were bad last quarter. And then all of a sudden their earnings come out and they were explosive. Well, it's because Wall Street already knew and was buying, and that's why you have to follow the technicals in addition to the fundamentals. So the strong future earnings chart list, in my mind, is just companies that are trading very, very strongly on a relative basis. They're technically very sound. And so right now I've got 278 companies. This was also just recently updated. The companies on this chart list must belong to the strongest industry groups as defined by me. And we have an industry group chart list, which I'll talk about in a little bit as well. But I use that to go through and evaluate industry groups. I don't want a strong stock in energy. I just don't. That's just my strategy. Energy is the worst performing sector. Why is it the worst performing sector? Wall Street doesn't like it. You might be, it's kind of like when you buy real estate. You don't want to be the best house in a bad neighborhood. You'll probably never get your money out of that house. And I kind of look at the market the same way when you're looking at the sectors. If you're a great stock, or your stock, you've been performing really well, but you're in the worst sector, I'll let somebody else own you. I don't want any part of it. Now, again, as I mentioned earlier, with like Chipotle, there are exceptions, but they still have to beat top and bottom line to go on the strong earnings chart list. There is a filter there. This one is not filtered with earnings, as I said. So this is strictly based on technicals. So I look for strong industry groups, scooters above 80. So just because you're in a strong industry group, if you're not performing well, you're not going to be on this list. You've got to be in a strong group, have a scooter score above 80, and are not already on the strong earnings chart list. So in other words, when I do the strong earnings chart list, I will make sure that when I update the strong future earnings chart list, I take off all the stocks that are already on the strong earnings chart list. So these two chart lists should be somewhat complementary to one another. Strong earnings are companies that have beaten earnings, look good technically. This list, though, looks good technically, and it's not on the strong earnings chart list. It isn't on the strong earnings chart list probably for one or two reasons. Either they missed their earnings estimate or their revenue estimate, or they matched estimates. That would be one reason why they weren't on the strong earnings chart list, but they may still be a great performing stock. So they would be added to this one. The other one would be, let me see. The other possibility would be, one is the earnings didn't meet. And then the second one would be, we take companies off of the strong earnings chart list as they approach their next earnings report. We try to get them off usually a couple weeks before they report earnings. So if I update the strong earnings chart list and I've just recently removed, say, Apple, and Apple's going to report next week, well, when I go through, Apple's going to show up as one of the strongest stocks in one of the strongest industry groups. So Apple's going to go on here, but it's not on the strong earnings chart list because I just removed it. We don't hold on the strong earnings chart list. We remove everything before earnings. Then if they come out with great earnings, they go back on that strong earnings chart list, and then they would come off of the strong future earnings chart list. So they do kind of complement one another. All right, the third and fourth chart list I want to talk about are the accumulation distribution chart lists, strong ADCL and weak ADCL. Now the strong AD, and you have to understand a little bit about accumulation distribution here. Accumulation distribution is based on, it's a technical indicator at stock charts, and it's based on your trading range and where you finish in it during the day. So in other words, let's say ABC stock, its low of the day was 10, its high of the day was 11, and it finished at 11. Well, it's right at the top. That is 100%. According to the AD line, that your multiplier, which is where you finish relative to your high and low, that multiplier would be 100. And what you're multiplying times is your volume that day. So in that case, the case I gave you, if volume was big and you were, even if, let's say the stock was at 12 yesterday at the close, it opens at 10 and trades back to 11. So it's still down $1 for the day. It finished down. On balance volume would take all of that volume as a negative because you finished down versus the prior day. On balance volume doesn't care what you did during the day. It only cares about, did you finish up or down? Doesn't care about whether you rallied, whether you fell during the day. Did you finish up or down? If you finished down, on balance volume subtracts the volume. If you finished up, it adds the volume. the AD line doesn't care whether you finished down or finished up for the day. It only considers what you did during the day. And the reason that this was so important in 2020, and I can't emphasize this enough. The reason it was so important in 2020 was we had, in my opinion, media-induced panic back in February and March. The healthcare crisis was real. I'm not saying that was not real. We can argue about how bad it is. Is it a really bad flu? Is it really something a lot worse than that? Yeah, everybody's going to debate that. Okay, I'm not even talking about that. It's a healthcare crisis of some magnitude. I think just about everybody would agree that there's something there. And many of us would agree that there's a lot there. Okay? But from a financial perspective, we went into this pandemic in February with unemployment at the lowest rate in 50 years. We had one of the strongest economies on record going into this pandemic. And my belief, even when we were heading lower, was that the pandemic is going to be, there's a timeline here. The pandemic is not going to last for 40 years, at least I hope not. By the end of the year or within a year, we should figure out vaccines, whatever. It should be gone. We should be able to go back to regular business. And so if the pandemic had hit in 2008 in the midst of the financial crisis, who in the heck knows what would have happened? That would have been bad. Our economy was already on the brink. That would have been horrible. But in 2020, it was a completely different story. We had a very strong economy, very strong. And so I believe we were just going to weather it and then eventually move back to the upside. Now, that didn't mean that in the short term, the market moving lower, as a trader, I remember sending out something, I don't know, February 25th or 26th. The VIX started moving up. It went up through 20. And I was like, hey, I'm moving mostly to the side and staying in cash. And this is why I don't like to trade when the VIX is on the rise and moving through 20. That historically can be really bad as a trader. You don't want to just hold positions as a trader. Now, if you're buy and hold, you're holding. Buy and hold means you buy and hold. But as a trader, no. So you can have a long-term bullish view and a short-term bearish view. There's nothing wrong with that. And that's where we were in February. But what I found as we went through the month of March and into April is that we had a bifurcated market. Everything was gapping down at the open. You'd wake up, my gosh, the futures Dow down 1,700 points. It's like, who wouldn't panic in all that? But what would happen is everything would gap down, and then half the market would keep going lower, and the other half would bounce back. And the way you can see this, and I'm going to go over here. I'm just going to show you a chart now. I know I've been talking a lot just on the website, but let me show you a chart. I'm going to show you the QQQ. So this was February. See this move down? And actually, let me just make this accumulation distribution line a little bit higher here. Okay, so here's price action. Here's your accumulation distribution. So here was our first move down. You can see we were moving up, AD line's moving up. We moved down at the end of February. AD line moves down. We bounce. AD line bounces. We kept going down in price here for 2 or 3 weeks. AD line never broke down. Now, keep in mind, the QQQ is made up a mixture of a lot of different stocks. Same with the Spider. You got 500 companies in here. Spider did the same thing. We kept moving down, but the Spider never went to a new low. It was really weird, and I started scratching my head. And then I started looking at stocks that were just, so many hollow candles where you would get gap downs and then recoveries back up. Trying to think of a stock, maybe, I don't know if Zoom maybe it was one. Well, Zoom didn't really go down much in March. All right, here's a perfect example. Peloton. I loved Peloton back at the beginning of April, and this was one of the reasons why. Look at March. Look at it going down. See it going down, and look at the AD line going up. Why is it going up? We were going down I guarantee you OBV, let me pull up the OBV. I guarantee you that was going down. So if we pull this up, so here we go. So here's Peloton going down. Here's the AD line going up. Here's the OBV going down. Why is the OBV going down? Well, as I explained, if you finish down from your prior low, then that takes the OBV down. But if you rally off of the lows, like this candle right here, as volume started to pick back up, look at these candles. We actually had 2 candles back to back right here with increasing volume. These were bullish days for accumulation distribution. And you can see the AD line going up those 2 days. So we were rising in the AD while prices were going down. And so Peloton went on the strong AD chart list. Now, if we look at something like AAL, which is American Airlines, it was going down and its AD line was going down. And even when it bounced, you know, it's trying to bounce here, but look at AD line still pretty low. This is completely different. And if you think about what Warren Buffett did, he exited every airline share that he owned. He owned 4 different airlines. He got rid of every airline, every share of every airline. You can't just put a market order in when you've got millions of shares of a stock. That's not how it works. You can't just put a market order in. You got to sell during the day. So airline stocks, we were seeing the selling during the day. Many other areas, technology, we were seeing buying during the day. And that was my first clue that this was a cyclical bear market. We are in a secular bull market. Because if we're going into a secular bear, who in their right mind is buying technology stocks? Growth stocks? We're going to go down for the next 5 years? I mean, that's what a secular bull market or bear market is. You're going to go down for a long period of time, not 30, 60 days, but a long period of time. You're going to buy it, into these high growth stocks. That made no sense to me whatsoever. And so I started spotting this pretty early and said, we're in a secular bull market. We're going to rally back. And I was definitely in the minority. I think, a lot more bulls were crowned, in July and August after the market already rebounded. But back in March, I still felt that we were in a secular bull market, even in the depths of that cyclical bear. And this was one of the main reasons. One last thing, because I don't know who's in here and how, if you've been listening to me for a while, you've probably heard this. It's just a refresher, but in 2008, the financial crisis, when we had the 30% drop or 25% drop, whatever it was, from late September through like the 3rd week of October of 2008, 84% of that drop, and I remember the numbers, 84% of the drop on the S&P 500 came during the day, not at the open, during the day. So yeah, we had some gap downs, but we had selling all day long. In this latest, when I went, I think it was from February, pull that S&P 500 up again. I think it was from February 19th to March 23rd, or maybe it was even over here into April. I don't remember exactly when I ran this. But I said, if you had gotten out of the market every day at the close and you bought at the open, not sold at the open, that's what everybody was doing. They were panicking and selling. But if you were market makers or you were institutions accumulating, if you were doing what they were doing and buying at the open, from February 19th to wherever that date ended, I don't remember. It might have been this low. It might have been over here in April. I don't recall. But you would have actually broken even. Didn't lose anything. The net loss was at the opening bell. Completely different than 2008. Everyone was like, oh, this is the Great Depression 2.0. It was not, that made no sense based on what was going on during the day. So anyhow, I don't want to spend any more time there, but that's the difference between the strong AD and then the weak AD. Weak AD holds stocks like AAL. Companies that were going down, their AD line was kept going down with it. So now you've seen 4 chart lists that we've put together. The strong earnings, the strong future earnings, the strong ADCL, strong accumulation distribution chart list, and the weak accumulation distribution chart list. Notice all these have passwords after. All you do is copy them, click on the link, you know, strong AD, this is what you do. If you're a member over at Stock Charts, you got to be at least an extra member, by the way. You copy, and here you go. And now again, if it asked me for the password, I'd paste the password. Then it would take me to this page. I save to my chart list. I come in here. I'm now looking at my strong AD. I would save results. Boom. That's how easy it is. Our fifth chart list, raised guidance. This was created when members asked me, hey, do you all consider companies that are raising their guidance? I hadn't in the past. So it's like, why not? Let's start putting together a chart list with raised guidance. So Erin actually works with me on this. And so she does a lot of the research and puts this list together. And then I'll probably, you know, at the end I go through and I'll start annotating it. But, you know, so we do a little combination research on this one, and then we pass this one along. But same thing, you just grab that password and you click on the link, you go in and you download it right into your account, into your Stock Charts account. Very simple. And then the last chart list we have is the short squeeze chart list. And this is, I know, a favorite of a lot of our members. So we do it once a month. I think the numbers come out every 2 weeks on the number of short shares out for each company. But I update it once a month just because every 2 weeks, it doesn't really change that much. So usually the 15th, today is the 15th. So also this week, we'll probably be updating this short squeeze chart list. But the short squeeze chart list right now has 92 companies on it. We updated it July 20th, right after July 15th. So again, we'll be doing that again probably sometime this week. And what we're looking at are companies that currently have short percentage of float above 20%. Now, the float is basically the number of shares available to trade. Well, when companies have at least 20% of that float short, that guarantees you buyers. And I don't want to get into a whole lot of detail about short selling. If you're not familiar with it, you probably can look it up. But essentially, all it is you're borrowing shares from your broker and selling them. Instead of buying a stock and selling later, you're selling a stock and buying later. It's just in reverse. So instead of buying and wanting your stock to go up so you can sell, you're selling and you're hoping the stock goes down so you can buy. It's just in reverse. That's all you need to really remember. But what this means is that when companies have a high percentage of their float short, that means a lot of people have borrowed other people's shares and sold them. They have to buy them back at some point. They have to buy them. It's guaranteed they will have to buy them at some point. And the other thing that's unique about short sellers is that, let's say a stock is trading at 35 and you sell short 100 shares. You borrow from a broker 100 shares. You're going to have $3,500 dropped into your account because you just sold a stock you borrowed for $35, 100 shares, 3,500. What's the most you can make on that trade? If the stock goes to zero, you buy it back at zero, you make 3,500. When you buy a stock, the most you can lose is, if you buy it at 35 and you buy 100 shares, the most you can lose is 3,500. When you short sell, that's the most you can make. Your loss is unlimited. Just like when you buy a stock at 35, I mean, you'd love for that stock to go to 10,000, in 20 years. And you say, right, how's the stock going to go to 20,000? Well, I don't know about 20,000, but you can see companies like Apple. There are a lot of companies that if you shorted Apple 25 years ago, you'd be in the poorhouse. Probably would have had your, margin calls many years ago. But the thing about short squeeze is they have to buy. And so when stocks start moving up, it's kind of emotional when you buy at 35 and a stock goes to 30 because you're losing money. And then you might just say, all right, I'm just going to get out. And, you take your loss and you move on. Well, when you're a short seller and you sell at 35 and the stock goes to 40, you're like, okay, well, it's up a little bit. It goes to 45. It's like, it's starting to annoy me a little bit. Then it goes to 50. Then it goes to 60. Then it goes to 70. The problem is many of your fellow short sellers don't last as long as you, and they start buying. So then you get technical buyers and you get short sellers that are covering. They're buying their shares back so that they can return them to the broker. And so these short squeezes can be very powerful. Now, this chart list, which has 92 companies on it, I would probably argue that between 60 and 70 of them are really bearish stocks. I would have nothing to do with them. I'm not saying that these 92 companies are great stocks, just run out and buy. Probably 20 of them are stocks that I would consider because they're starting to show relative strength. They're starting to break out above key resistance. Maybe their group has started to turn higher. There's all kinds of different reasons why some of these companies on this list may start moving higher. And it's those 20 you want to focus in on. And there are easy ways to do it. And I'm going to show you that in just a few minutes. So those are the 6 chart lists that we do right now that we update for our members. And as soon as we update them, we come in, the link gets updated, we put in a new password, and then in the daily market report that I send out every day, I'll say, okay, we updated the strong earnings chart list today. Make sure you go to the website and download it into your accounts if you're a Stock Charts Extra member or above, Extra or Pro. A basic membership at Stock Charts doesn't help you because you can only have one chart list in a basic membership. And I think the extra membership is only another $10 a month or something. It's very, very worth it because then you can go up to like 250 chart lists. You go from 1 to 250. So you definitely want to make sure you're at least extra. I think that's probably all I wanted to do with the individual stocks. So as we update these, we tell you, you go into our website, you download them right into your account. Literally, like I said, I'm not kidding, 10 seconds. When you come into the website, you highlight the password, click on the link. If they ask for the password, you put it in there, and then you download it. You overwrite your current list, or you can, if you want to keep your list, you can overwrite, or you can download it into a new chart list. You can keep the old ones if you want. I don't know if you'd want to, but if you do, just don't overwrite. All right. Now, the last thing I want to tell you about is our annual members, because we do have an annual special going on right now. Our annual members are entitled to this relative strength industry group chart list. And the reason that we only have it for annual members, we only offer it to annual members, is that this never gets updated. Once you have it in your account. So we go through all the work. If you're going to commit to us for a year, we'll give it to you. Otherwise, if you want to set it up, you can set it up, and I'll show you what we do. But it just takes time. It's a lot of time and effort. And to just give it away for a trial subscription or something like that doesn't make a whole lot of sense. So that's why we do it. So if you're an annual member, or if you sign up for the annual membership and you want this, contact us at support@earningsbeats.com and say, hey, I'm an annual member. I'd like for you to send me the link for this relative strength industry group chart list. And we'll send that out to you. All right, so that is really the meat of what we do. Now I'm going to show you how you can use this to your advantage. So I'm going to go into the strong earnings chart list first. And the one thing you can do at Stock Charts, here's all the stocks that are currently in here right now. You just flip through all of these. So you can see a lot of research in order to get these downloaded or loaded into a chart list. You can see Baidu. Now here's where Baidu came out with earnings. I think Baidu may have just reported or getting ready to report. So that's another reason why I got to get this strong earnings chart list updated. I think some of them may have just started reporting. So we want to make sure we get those off of that chart list. But Baidu gaps up, moves higher, nice move there. But the gap support, that was, I don't go back and later update these again. So I update them at the time that they get put onto the strong earnings chart list. So probably the earnings came out here in mid-May, pulled back, and it was probably sometime around here that I was annotating. So the whole idea was that we would annotate the key support levels. And so at this time, maybe back at the end of May, I looked and I was like, okay, gap support here. And if for some reason we go below gap support, maybe we go here, but I wouldn't want to go all the way back down to March. So I just put in here what I thought were a couple of key support levels, and then they're on the chart. And if you go back down, in this case, we actually tested the 20-day moving average. That's one of our scans, by the way, is to test for the 20-day. Go have it open above the 20, an intraday below the 20, and a close above the 20, which is perfect right there with that hammer. and look what happened afterwards. So that scan would have revealed Baidu that day. But within this, these chart lists, what you can do if you're not familiar, click on View All, and then you can go to Summary. Now, let's say, and I'm going to bring up some of these columns that are hidden right now: sector, industry group, scooter, and small cap. Just large, just the different capitalization. So small, large, mid caps over here. So I just added these 4 columns. Now, right now it's set up as default that your last, it's all set up right now based on percentage change and on what happened Friday. And so right now your intraday move here shows that MITK was the best performer on our strong earnings chart list, was up 8.75% on Friday. But you can manipulate stuff on this so easily. It's so cool. So let's say first you just want to know which stocks have the strongest scooter scores. Well, I can just click by that. And there you go. I've got all, Tesla, AMD, UPS. I can promise you some of these stocks are going to be on our portfolios later this week. OPK, Quidel, NVIDIA, Apple, Lithonia or Lithua, I forget, that's a specialty retailer. West Pharmaceutical, Emergent, FedEx, Zoom, PayPal, Take-Two, Docu. Just list goes on and on. But these are the best performers. That was just one click to show. And now the other thing is, any stock you look at on this list, you already know they beat earnings and they beat revenues in their last quarter. If they didn't, they wouldn't be on this list. So that's one filter. You've got research done for you. If you decide you want to trade one of these stocks, you already know that the company beat earnings and beat revenues. The other thing you know is that it's liquid. We wouldn't have it on this list if we didn't think it was a liquid stock. So you don't have to worry about, well, is the volume enough? If it's on this list, the volume should be strong enough. And then the third thing is, it's probably pretty strong technically, or at least at the time it went on. Now, again, I don't go through and review this every week or two. I mean, there's not enough hours in the day. I would need probably about 100 hours a day. So I'm not going to go back 2 weeks later and see that one of these stocks broke down below our support levels and pull them off the list. But you're going to see it. If it's annotated and you see the stock goes down below our key support levels and the volume picks up, then you're going to know, hey, this thing broke down technically. Probably want to be a little more careful with a stock like this. And I would ignore it. Another way to find that out is simply to scroll down the list and find the scooters that have fallen apart. There will be plenty. I mean, you can see them down here: 30, 29, 20, 3, 3.5, 3.2. These are stocks that at the time maybe looked pretty good, or maybe I was thinking, hey, this is an aerospace stock, TGI. Maybe I liked the fact that it was probably earnings, so it was probably right back in here sometime. So the stock went up. Look where we came back down to, by the way. Eventually, we came right down and right into this support level that I had provided, and we turned right back around. Stock went from 6.5 to 9 in a week, or a little over a week, less than 2 weeks. So that's the beauty, I think, of having these annotated, is that some of these stocks, even when they fall apart, may end up going back to a key support level. All right. So that's the scooter. So we can sort it by scooter. You might say, well, I like it by scooter, but I also want to know what the small cap stocks are. Well, if you go down here to small caps, just keep going down until we find the small caps. Because I sorted in scooter order first, it actually has small caps in scooter order. So SPWH, which is sports something or other, specialty retailer, that's the highest ranked small cap stock on our strong earnings chart list. CALX, computer services, next. Furnishings, next. This stock was on, I can tell you, was very high on our short squeeze chart list. So now you got a stock that's on our strong earnings, 96 scooter, almost 97 scooter, and it's on the strong earnings chart list. That could be a short squeeze, possibility of a short squeeze. And actually, I had a bad day on Friday, but let's take a look and see what it did here. I mean, look at this stock. This was when it probably was added sometime back in June. I'm assuming this big volume day right here was probably earnings. So it was probably added back in here somewhere. But the stock went up from 20 to 30, almost doubled in 45 days. But that's probably a lot of that has to do with being a short squeeze stock. All right, so what else can you do with something with a chart list like this once you have it set up in your account? Well, what if I said in a daily market report that delivery services look really strong, which they do, by the way. Well, if you type in delivery services into the search box, it will narrow it down and begin to show you whatever shows up on the chart list. UPS and FedEx are both in here, delivery services. Another one that just reported, Atlas, AAWW, they reported in August. I haven't updated for these last 2 weeks. That one will be going on this list. I just wrote about it in my Trading Places blog right before the webinar. So that's delivery services. But what if it was, I don't know, automobiles or yeah, well, we got Tesla. What about if it's semiconductors? Well, there you go. Ranked in scooter order: AMD, NVIDIA, TSM, Qorvo, SWKS, Lam, ASML, Xilinx, AVGO. I mean, there's the list in scooter order. Actually, oh no, it's in large cap order first, then scooter, then mid cap, then scooter. I forgot I'd made that adjustment. So, I mean, do you see how powerful this information can be? And I'm not done. I mean, there's so many more things I could do. How about this just as an intraday? How about if we want to say, I want to see the stocks that actually pulled back last week. So there's a 1 week. Let's just sort it based on percentage change. These are the stocks that went up. And by the way, there's an energy stock. So it's not like we don't have any energy on here, but you better be a pretty good stock if you're in energy to hit our list. Percentage change to the downside. So the other thing I might do is look at, let's pull this up scooter first, then go to percentage change. Oh, well, never mind. I can just look down and say, oh, well, this one got hit pretty hard. It's got a scooter of 99. Some of these scooters that are really high, I might be very interested in on any kind of pullback. So last week, for instance, QDEL was down $26, 10%, and it's one of the best performing stocks in the market. That could be a great opportunity. And look, it came right down to the 50-day moving average. Actually, it went down below some of the key support levels I was looking for, but it reversed right on its 50-day moving average and turned back to the upside. See if there's any others. Here's a software stock, TWOU, 84 scooter. This one came down and literally sitting almost right on this support level right now. It'll be interesting to see whether or not this one turns next week. But, 92, SLP, technology stock. And here was the move down after earnings, bounced off of it. So right now it's got some pretty good support right in here at about 59 bucks. Trading at 61, the stock was just $73 2 weeks ago. So as it gets closer to support, the reward to risk is getting better. So this is just using one example here, but this is the strong earnings chart list and just playing around using this summary feature, which is pretty cool. Now, the other thing you can do is you can go to scanning, and I'm going to go into scanning strategies in a couple minutes, but I just want to show you what you can do with the chart lists using the scans. So I'm going to set up a new scan. And I just mentioned, that Love was on the short squeeze chart list, and I also noticed it was on the strong earnings chart list. Well, you don't have to go through stock by stock and try and figure it out. Just go over here to stock charts and go down and grab your chart lists. So I'm going to go down and grab strong earnings chart list, add, and then I'm also going to go down to short squeeze and add. So now the only two things on my scan, I'm asking for a filter to give me the stocks that are on this chart list and on this chart list. So it's got to be on both or it won't return anything. And by the way, when you pull up chart list in your account at stock charts, you're not going to see these numbers that I see, 54, 95. I actually, whoops, I don't know what the heck I just did there. All right, I'm gonna have to do it again. I actually asked Bill Shelby, who is one of the senior folks over at Stock Charts. He basically did everything with the scan engine. And I was asking him about that. I was like, what do these numbers mean on here? And he said, well, he said it was done a long time ago. And he said, he said, I don't really recall, but he said, probably what it is, the first chart list you create is probably list number 1. The second one you create is probably list number 2. The third one is list number 3, and so forth. And so what you create in your account, you're not going to create the same time. So all of the saved scans that I have on our website do not include favorites list is with a number, because this is the reference in my account. Your account at Stock Charts is going to have a different number. So if you copy and paste, nothing will come up. And we had members asking that question. It's like, I copied your scan. I saw the one you used on your webinar, just like this, and said I took a picture of it. And when I ran it in my account, it returned no results. I don't understand why. It's the same chart lists. The reason is your account's not going to recognize favorite list 54 and 95. So let's check the syntax of the scan. Everything's fine, and let's run the scan to see which companies are on here. Oh, there's 4. And there's LOVE, the one I mentioned to you. So all of a sudden now we know that on the strong earnings chart list, there are 4 companies that have beaten Wall Street estimates, top and bottom line, look pretty good technically. I mean, you can look at the scooter here, 99, 96, 84, and 65. That's not bad. And they also have high short percentages. So without even looking at the short scan or the short squeeze chart list, I would already say that these are 4 that might interest me on the short squeeze chart list, because I know their earnings are strong. Fundamentally, they're performing well. And technically, they must be pretty good, or I wouldn't have included them on this chart list. And then I know that there's a short squeeze. So all of those things combined, that's a great strategy to use from time to time. And when I update both of these chart lists here this week, strong earnings and then also the short squeeze chart list, you'll be able to run this and get an updated list of what might look good. All right, next up, what else could we do? How about, I mentioned that strong AD. Well, the strong AD was developed back in April. We do not update that. The original list is the one we've just stuck with, because these were companies that were being accumulated during the pandemic. And I think that we are in a paradigm shift. I think that, some of those stocks that were accumulated back in April, maybe they don't have any advantage anymore. But some, I think, are going to. I think stocks like Zoom, I don't think people are just going to give up on Zoom when this pandemic is over and start going back to work and in their office. I think this is a paradigm shift. I think companies are finding out that, hey, you know what? We resisted doing this for a long time, but this is pretty cool. Maybe some people they want to have back in the office, but they might let a lot of people work from home. So a company like Zoom is going to benefit long-term. So that's why I didn't want to start changing the strong AD list. So if I get rid of these, and let's say I come down here and I say, okay, give me companies that are beating earnings. So let's go with the strong earnings chart list, add that, and then give me the strong AD chart list. And add that, and let's see where we are. Now we might, actually I'm going to add another filter because I think there's going to be a bunch of them. Let's go with scooters. So we're also going to make sure we still have great relative strength. So we're going to add the scooter in here. The default is greater than 90. I'm going to go to 95 and just see how many of these stocks. So they beat their earnings, they beat their revenue, they're liquid, they look good on their charts. They were also great AD stocks back in April, when the pandemic first hit, and they're still great stocks because the scooter is above 95. Check the syntax. We're good to go. Run this scan. 20. That's a pretty manageable list. And it's also a lot of companies. Without looking at these companies, I blindfoldedly could put these, using a blindfold, I could probably put these into a portfolio. And I bet outperform the S&P 500. And as you go through, you're going to see a mixture. Where are you getting the strength from? Technology in semiconductors, got some healthcare. Actually, we can sort this by sector. You got one communication services company, Take-Two Interactive, Internet. You got 4 consumer discretionary. You've got 1 consumer staples, 4 healthcare, 1 industrial, and then 9 technology. I mean, I bet this is a pretty good list. I'd be interesting to see how it does over the next quarter. I'm not going to track another chart list. I don't think I could have the time, but if anybody has the inclination from this webinar and wants to track this, and if you're familiar with user-defined indexes at stock charts, you could put this in all 20 into a spreadsheet, equal weighted, and keep a value every day for it, and report back in 3 months. I'd be interested to see how it happened, or at least what the end result was. So that's kind of how you can use these chart lists. And I'm trying to think if there's anything specific to any of these other chart lists that I would want to add. We talked about, let me just go into the the short squeeze. So the short squeeze, when I put this together, this does not have the annotations on it. So this one I don't annotate. And many of them, to be quite honest, I wouldn't want to annotate. I wouldn't want to give anyone the impression that I would buy them. The whole idea and what we do is notice, if I'm going to pull this up and show you summary form and sort it by name. So what I do is when I put these in order, I number them from 1 to 92 according to highest short percentage of float, 99%. I didn't even know you could get one that high, all the way down to just above 20%. Remember, 20% is our cutoff. So if a stock's got 19.99% of its float short, it won't get on our list. It's still heavily shorted, in my opinion, by the way. I think anything over 10% is pretty high. But I go through and we put in anything over 20%. That's really a high level of short interest. And when you think about it, only 92 companies in the market have, numbers that high. So the other thing that's interesting here, though, is now I could sort by scooter. Look at one of the stocks on this list, Wayfair. Can you believe Wayfair still had, as of July 15th, right here, the stock still had over 20%, 25% of its float short? Who in the heck's been holding that for that long? Shorts can be a stubborn bunch, but when they finally start buying, look at the volume picking up here in July and August as Wayfair just went up 50% in a week and a half. I promise you that was some short selling covering. I'm going to be interested to see if Wayfair is still on this list after the last month with this move to the upside. I think maybe more and more shorts may have covered, and maybe it's under the 20% threshold. That'll be an interesting question. But once again, this is a great way to use the stock charts features along with the research that we do. And so you've got 6 stocks here right now that have scooters above 99 that are on the short squeeze chart list. That's a pretty impressive number. Love, even though it had that rough day, still 96 96 on the scooter. But as I said, when you get past maybe the top 20 to 30, look at all these others down here with really low scooters. And some of these others, by the way, don't have scooters. So one thing we could do is maybe pull up, like, what's the 3-month track record? We've still got it in scooter order, but the ones that don't have scooters, you can probably look and see based on 3-month percentage which ones are really strong. So YRCW has been up 175% the last. Would you want to be short in that stock? Or GSX up 155%. This one, JKS, Jinko Solar, only 44%. That's a bargain. Pull that stock up, and it broke out back here. Look at it, went back down, hit the breakout level, turned back to the upside. I think it's just consolidating, but I'll bet if it breaks above 23 and the volume starts to pick up, it's going to probably scare some shorts out of their positions. They're probably going to have to run for cover. So again, putting all these things together, there's so many options of what you can do. And we haven't even talked about scans yet. So let's go ahead and do that because I want to try to wrap this up by 4. So we got 20 minutes. And actually, I can probably wrap this up in about 10 minutes over the scanning because once you, I've got the syntax and I'll show you what we do. And then I'll go through questions, maybe the last 10 minutes. So let's take a look at the scanning strategies. So if I go over to the website and go into the scanning strategies. And so now here, and by the way, we've got these kind of tutorial videos that we've done. And so, watch these. If I'm not explaining it well, maybe I talked about some additional things. Same thing with the chart list. So we try to embed these in here so that you can get a little bit more, glean a little bit more information out of us. But let's see, after we've gone through the market, moving down for a little bit or maybe even sideways consolidating, one of my favorite scans is this one, the downtrend reversal. Essentially what you're looking at here is that your daily high, I'll just start here at the top, daily high is greater than yesterday's daily high. Okay, so in other words, you are setting at least a higher high today versus yesterday, and yesterday's daily high was less than 2 days ago daily high. 2 days ago daily high was less than 3 days ago daily high, and so you kind of get my drift. So the highs kept coming down, 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 but today's high took out yesterday's high. So for the first time in 6 days, we're starting to see a higher high. Now, you could run this against the entire market, but it's going to give you some really bad stocks that have been going down for months that happen to just put in a higher high. That's not the kind of stock I want to get in. I want to get into stocks that are pulling back, that are strong stocks. So I can take this syntax, copy it. So I copy, and then I come over to stock charts. Let's go back to that. New scan. Get rid of all this. I don't have to put volume or anything or type equals stock. I don't have to do any of that because if I'm going to run it against the chart list, the volume has already been filtered. I've already made sure that the volume is sufficient. We don't need stock because we know it's not an ETF. There are no ETFs in these charts. It's not, we don't have to specify it's a US stock because we already know that they're all US stocks. So I can just get rid of all this and I can simply paste. And there's my scan. And then before you do anything else, go up here and click Save As. And save it as your downtrend reversal scan. And maybe you want to number it. So, maybe if you number it in the order that we have it on the website, I don't remember. I think this was number 2 or number 3. Let me assume it was the third one. I can't remember if it's second or third. But if it was number 3, just put in 003, downtrend reversal. And then click the OK. I'm going to cancel because I already have mine saved. But then once you have it saved, you can come in here anytime and just click on your saved scans. You don't have to go get it from the website, our website. Okay. Now from here, you have to go in and find the chart list you want to run it against. So which chart list do you want to run this downtrend reversal against? Well, for me, it would probably be one of my bullish chart lists. I don't want to run it against the weak AD chart list because that's made up of companies that were struggling back during the pandemic. Short squeeze, again, many of the stocks on that list are probably downtrending stocks. So you might get a reversal, but majority of them probably aren't going to be stocks I'd be interested in anyway. And getting a stock from a short squeeze perspective, I don't like to buy stocks that are pulling back on the short squeeze list. The whole idea in a short squeeze is that you want to see the stock just keep going up, up, up. So if it's been down 5 days in a row, it's probably not the kind of stock I want to be in anyway. So let's say that we want to run this for we'll just run it against the strong earnings chart list. So we can add this. So now it's going to run it against my strong earnings chart list. And I know I like all the stocks that were in there. At least at the time I added them, I liked the stock. So I'm going to check my syntax and we're good to go. And now I'm going to see if any of these, if it met this criteria. And so run the scan, the results, there was one, General Mills. So let's pull up General Mills. Look at this. It had been going down 5 days in a row. Look what happened on Friday. First time that it actually has printed a higher high. So do you see what it's doing? It's getting you these stocks that have pulled back as opposed to stocks that have been going up, up, up. Now, the other thing is you might look at this and say, well, we just closed a little above 62. If this stock closes below 62, I'm getting out. Well, it's 63. You're only giving up 2% to the downside. So, I mean, that's perfect. The other thing we could do is this is based on the last market close of August 14th. I could go and say, give me one trading day before that. And then I could check the syntax and I could run scans. So this was what would come up on Friday. And I don't even know if there were any. Oh, 19. So on Friday, there were 19 of these. And let's sort it based on scooter score. So the first one was Zoom Video. Zoom Video, this would have been the first day. If you had actually run this intraday, you could have gotten this stock maybe when it was at barely over 240. And the stock went up to 250 and change on Friday. So again, look what it's doing. It's picking up these stocks that have been coming down. And if you happen to combine that with the scooter, you're getting relative strength stocks, strong relative strength stocks that have pulled back 5 days in a row and have just shown the first sign that maybe they're going to resume back to the upside. I think this can be a really important scan. PayPal. PayPal yesterday went up. We did get a pullback and a reversal yesterday on PayPal. But again, you're not buying it when it's over 200. It's forcing you to wait until you get a pullback on a stock. You got to get at least 5 days in a row. Now, if you start running these scans and you don't get anything back and you get no results, you could always just go in here and maybe get rid of 1 day. So you get rid of that. Now you only have 4 days of downs. Now if a stock reverses after being down 4 days in a row, it'll get pulled up. So now instead of, I don't know what we had on that last one, but maybe we'd have more. I think we had 20 last time or 21. Now we have 27. So now all of a sudden we have more. If we wanted to add a couple more days and go 7 days of downtrends, probably be a lot less. So that's something you can do. What other scans? Let me go back to the website here. I mean, most of these are self-explanatory. Let's pull up the 52-week high one. Just do one more maybe. Now, one thing that I might do is take that. Almost every stock that's got a scooter score at 99 is either at or about to break out to a new 52-week high. So if I don't limit it, I'm going to get a lot of stocks that are setting 52-week highs, but many of them are stretched. So one thing I like to do sometimes is take a stock maybe that's breaking out, but its scooter score is maybe under 90 or 85. So I've copied that scan. So let's go here in here and let's drop this in. So that's a very simple 52-week high. And by the way, 253 days, 253 trading days is roughly 1 year. But you could say, I've had members write in, how do I write it for a 20-day? Just change that. There you go. It'll give you now stocks that are trading at a 20-day high. Want 50-day high? Put in 50-day. Just this is the way it's written though. So 253, let's just go with that. So setting a new 52-week high, you can go in, like I said, save. That just makes it your 52-week high scan. And then you pull it, when you go in and you retrieve it, then you just have to figure out, okay, what do I want to do? What do I want to add? So I'm going to go in and I'm going to pull up the scooter. And I'm going to say, okay, I want all the stocks breaking out above 200, breaking out to a 52-week high that have scooters below 90. And then maybe I will say also give me my chart lists. And let's do this one let's do it on the strong future earnings list. So we add that. So now any stock setting a 52-week high on the strong future earnings chart list with the scooter of less than 90 will be returned. Oh, let me get rid of that. So I want to do as of Friday. So let's check syntax again. There we go. And now let's run this scan, see what we get. 3. Okay, perfect. And look at their scooters, all just under 90. All right, so I can pull these up. BMC. This one went sideways for quite a while. Just recently, this is earnings breaking out. So this one's, yeah, it's definitely up. It's probably a little overbought, but it's not going to be as overbought as some in the market. CDMO, Avid Bioservices. This one just broke out above that December high and really sideways consolidated here for about 5 or 6 weeks. Volume's just starting to pick up. So it's kind of giving you a different flavor of stocks that are breaking out. So you're limited only by your imagination. We do the research, Stock Charts gives you the tools, and then you just put it to work for you, however you want to do it. And I think if you go through and you work with this, you're going to find that there are some really cool features. And I think you're going to see a big improvement in your trading results. I think one of the big things is trading bad stocks. I can't tell you how many people I know that I just go up and sit down and have a beer with them. And they're like, oh, I bought American Airlines today. I can't believe how cheap it is. I'm like, really? Warren Buffett just sold every share he owns. You think you know something he doesn't? I mean, these stocks are being heavily distributed. If I asked you what the earnings for American Airlines is going to be next year or the year after, would you have a clue as to what they're going to do? Wall Street hates uncertainty. And valuations are based on future earnings growth. There are not going to be too many people jumping in with both fists into airline stocks right now. Could they go up for a period of time? Sure, any stock can go up. But, when you look at them, they're underperforming by a wide margin. Why would you want to get into that? What we're doing at EarningsBeats is we're basically doing all the work for you, giving you the best stocks in the best chart lists, and you're combining it with the best tools on the planet at Stock Charts, coming up with great candidates. Now, this is more for traders. Our chart lists and our scans. I'd say the portfolio is more for people working during the day, don't want to be bothered with all the stuff I'm talking about, and just want to go with leading stocks and leading industry groups and let the chips fall where they may, because they're going to buy and hold a mutual fund, or they're going to go do something else anyway that doesn't involve looking at the market every day. So our services, I think, are really designed to help both traders and investors. And so when I get a lot of questions on the portfolios about, more from a trading perspective, and that's, if you ask me, why are there no stops? What buy and hold investor do you know that has stops? You don't. You're buying these stocks and you're holding them for 90 days. Then you're going to swap them out. Now, if you want to cater anything we do into your own strategy, that's awesome. That's what most of our members do, I think. I don't think, all of our members go rushing into these portfolios. I don't think that's the case at all. And my daughter, she has the model portfolio. She owns it and she's held it. I don't. I tried it one quarter and that's not my mindset. I'm a trader. I watch the market all day. I can't watch the market all day and see a stock moving down below the 20-day moving average and hold it. If I think it should be holding the 20-day, I want to get out of it. So I'm a trader at heart. So I use these chart lists. I use the portfolios a lot. Most of the stocks I trade, many of the stocks I trade are portfolio stocks. But I'm not a buy and holder. That's not my mentality. It's not my strategy. For those that is their strategy, I think it's a great product. And like I said, my daughter, Erin, she's not into trading. She's told me, I don't like watching it every minute. I ask her sometimes, I'm like, hey, you see the model portfolio? Had a good day today. She's like, I don't know. I haven't looked at it in a few weeks. Completely different. Well, she hasn't looked at her account in a few weeks. She's looked at the portfolios because she helps me and works with me. But that's her investing mentality. And everybody is probably like that. They're like Erin, or they're like me, or maybe they're somewhere in between, or maybe they're at the extreme, one level or the other. But everybody's different. So you've got to kind of factor that in when you figure out how you can use our service. But I do think our services could be appealing to anyone who's in the market. So that's essentially what I wanted to go over today, John. I just wanted to really just talk a little bit about some of the things you can do with all of our services. I wanted to, the new folks that are in here, maybe that have never even seen what we do at EarningsBeats, give them a tour.
Yeah. Awesome. I learned a lot today.
Yeah. So what kind of questions we have?
A couple quick questions here.
Yep.
Can you merge these lists and come up with stocks that are on multiple lists on a report?
So you want to know which stocks are on both? I think I did
Yes.
that earlier. So you want to know which stocks are common denominators in multiple lists. Yes, you can do that. So what you do, and I'll do it. I'll do 3 lists. So you can go in and say, I want the stocks that are in. Again, I'll get rid of that because we don't need that. But let's say, all right, give me all the stocks that are in the strong earnings chart list, and give me. I also want to know if they're also in the strong. No, it won't be the strong future. That's the wrong one. Also in the strong AD chart list, and then also maybe in raised guidance. I doubt they're going to be any in all 3, but maybe. So we'll just try that. So company has come out with strong earnings, so they meet all of our filters there. They also were great during the pandemic, looked like they were being accumulated back in April, and they recently raised their guidance. And I'm going to just check syntax and run the scan. Wow, there are 15 of them. That's pretty amazing. So yeah, I mean, that's how you narrow it down. So you don't have to go in and manually look. Now, the other thing you could always do is run an or list. So you might look for stocks that are on one list or another. And the only thing you would want to do there is just put in or instead of and. And one other thing you have to do. Once you, I think I would need probably, well, actually, let's do this. I'm gonna leave that as and. So I'm saying it's got to be on the strong earnings chart list and either the strong AD or the raised guidance. So it can be on either one of these two, but it's on the strong earnings. So it's strong earnings and then I want to put another bracket in here. And then another bracket right here to close so that the system knows that your or is these two. So the start 2 brackets and then you end with 2 brackets. So now what the scan engine is going to look for are companies that are on the strong earnings chart list and either of these two. So I just had the other scan come up. I forget what it was, how many, 14 or whatever it was. This should be more. This should definitely be more. So I checked scan syntax, which is fine. Run the scan, and yeah, now you got 110. So you see what I did there? You can definitely merge and combine these different chart lists however you want. Now, if you wanted to actually, let me go to the chart list. for some reason, I don't even know why you'd want to do this, but let's go into edit the strong earnings chart list. So let's say these first 5 charts, for whatever reason, you would like to move them into another chart list. And I don't know, maybe the question kind of centered around this as well to some degree, because you can merge chart lists and stocks in other chart lists. Now I could say I want to copy those. If I copy them, that means they stay here in this chart list, but I'm copying them to another folder. Or I can come down here and say I want to move them. If I move them, they're coming out of this chart list and they're physically going into the other chart list. So if I just say copy to, then I can go in and I can find the other chart list I want to put them in. And I don't know, maybe I have a test or something here. Here's a test folder down here. So I'm just going to copy and put those 5 into this test folder. All right, so here in strong earnings, I've still got those 5. So from 53.92 to 53.96. Now if I go down to that test folder, and there they are. There are the 5 I just sent over. So that's how you can, you can kind of mess around with the different chart lists at stock charts and move things. But if you want to scan, then the way I showed you, I think, is the answer. What else you got?
A couple of quick ones, we'll wrap it up. Is it possible to see the components of an industry chart from the RSICL? 104 industries, each industry is represented by which stocks?
All right. Let me first, because I actually said earlier that I would actually show everybody this relative strength industry group chart list. Here it is. So there's 104 charts. It's all the industry groups, okay? So let's say that we're looking at, and I'm going to go down to the industrials, and I'm going to take a look at what I think right now is probably, if not the best industry group, one of them, and that's delivery services. So here you've got delivery services just absolutely exploding. The top part of this chart is the delivery services index divided by the S&P 500. So you can see it was underperforming for 3 years. This is a 3-year weekly chart. But since May, look at this explosion to the upside. Money is pouring into these stocks. And we've seen why. FedEx and UPS both just came out with ridiculously good earnings. That's why you've got to follow what's going on in the market. You can't wait for earnings to come out. You've got to be looking ahead. The market is going to tell you what's coming and not necessarily what just happened. And so I think following these is really important. So let's say, okay, delivery services, you look at this and you say, okay, wow, delivery services is great. What stocks are in here? Well, if you go to stock charts, you got to know a little bit, you go into the sector summary over here, and I was just into industrials. So you click on the industrials and there's delivery services. Click on delivery services and there you go. There are the stocks that are in here. Now I can tell you one that's going to be added, and I've just wrote about it, is Atlas Air Worldwide Holdings. Look at this stock. I mean, the accumulation distribution going through the roof. This stock's been great. Small cap though, it's only maybe 1.5 billion, so it's much smaller than UPS and FedEx. So maybe there's a little added risk, but if you like the smaller stocks, there you go. What else you got?
All right, I have one last question, but just before somebody else asks me a question regarding membership, and the specific question, which is a good one, the specific question that I answered had to do with the fact that he's currently a semi-annual member. I wanted to know if he took advantage of the Tom's anniversary special, would he get the 14 months added to the existing membership? And the answer is yes.
Yes.
And it's the same thing. Anybody who's a member, you could be an annual member right now, and you could add on to your annual membership. You get the 14 months plus any remaining time. Same thing with a trial member. Same thing with a monthly member. If you just, let's say you just renewed for a month 3 days ago, and you sign up for the 14-month special, we'll add that remaining 27, 28 days to the 14 months. Anybody who is an existing member, no matter if you're trial, monthly, or annual, semi-annually, when you fill the form out, just make sure you indicate it's a renewal, because when you indicate it's a renewal, it'll bump you at that point for the year. We'll see that it's a renewal, then we'll add any of the remaining time on your membership plus the 2 months as well. So I wanted to clear that up.
Yeah, and that's actually probably a good time for those that came in later, because I showed this earlier when we first started, but I actually came over to EarningsBeats just a little over a year ago. So we're running a 1-year anniversary special. We were going to have it expire today, but we've already been asked multiple times by folks who are just experiencing our service if we would hold off until Monday. So we're gonna run it through Monday. So you do have a little bit more time, but that will be it. We're not going to go past Monday. We'll have our normal webinar specials on Tuesday and Wednesday with Max Payne and the top 10 picks, but that will only be 1 extra month. So you're going to get, this is the best deal. So right now we're trying to encourage our members, if you like our service, to check it out. You know, monthly, if you let your trial go after 30 days, you're going to start paying $97 a month. If under this deal, if you pay for the $697, you get 14 months, you're paying about $50 a month. That's about half. And I know a lot of services will say, okay, you buy 12 months at the monthly rate and we'll throw in a month or two. I mean, we're throwing in basically, you know, we're charging half price. It's a really huge savings. And as an annual member, you do get that industry group relative strength chart list, which is important. So if you have any questions when you're in our website, just go to this webinar special and it'll bring this up. So you had one other question?
Okay, last question. Yeah, from Eric. In a previous webinar, you mentioned briefing.com as an information source during the day on stock-specific news flow. The question is, there's 2 parts to this question. The first is, which component was that? Do you remember that one? Briefing.com and specific news flow?
Well, a lot of times if you go to, it's briefing in play. So if you go, you can just go to Google. And I'll type in, I'll show you how I come to it. Briefing in play. Click on that. And then this hourly in play is what you want. And you click on that and it basically gives you until, I think it goes back to like 4 o'clock the prior close. So here, Friday, it doesn't update. There's really nothing over the weekend. So Friday, this is all basically after the close and it goes all the way back. Oh, it only goes after the, okay. So, but usually what you would do is you would see it all the way from the time you're looking at it today to 4 o'clock yesterday. But yeah, it gives you a lot of headline news. This is where I do get a lot of my news though, is I want to know, you know, I want to know the news without a lot of spin. I just want to, just give me the news and let me look at the charts. And that's all I need to know. I don't need to know whether it's a buy or a sell from somebody or, you know, what's going on in their industry. Just give me the news. And this is essentially what you get. You don't get much spin. You just get the numbers and the facts. And so, yeah, this is, I guess, the answer to part 1.
And the second part has to do with Zacks, which is your source for earnings. What's the cutoff in earnings per share beat? You take all of them, or is there a threshold to get on your list? And how do you reconcile earnings beats with no earnings?
Well, I mean, I'm going to go in here. I'm just going to pull up, let's pull up August 5th. And so here are all the companies that reported on August 5th. I'm going to go in, hit plus sales surprise. I'm going to sort it alphabetically. And then I'm going to go through this list. So here are all the companies that reported. This is just one day. And this is going through the entire list. Now that, and then of course you go on to the second page or whatever. So, you know, companies like LVGO, Livongo, which has been a company I really like, they beat their top line. They also beat their bottom line. So if I go over here to earnings surprise on the positive side and type in, and I go down to the L's, we should see LVGO. There it is, 11 cents versus 1 cent. So that's a stock that's going to get filtered to the next level. Then I'm going to look, is it liquid? I know it's liquid. What's their chart look like? Well, I didn't even have to look this one up. I knew Livongo. I know what their chart looks like because I've seen it plenty of times. I've traded the stock and it's one of the best stocks in the market and has been. So this one absolutely will be added. This is August 5th. Now remember, I've only updated through July 31st. So right now it's not on the list. Or if it is on the list, it's because I didn't take off the ones at the beginning of the list. Remember I said that I always take the ones off that are going to be reporting earnings. I may not have taken this one off yet, but normally what happens is I take it off and then once it reports and then it beats, I put it back on. But I don't care if the reported number is 0. I don't care if it's negative. If they beat what's expected, you have to understand how valuations, my background, I was a practicing CPA for 20 years before I got into this. I've always had a passion for the market, but my background is fundamental. Technical is just a passion I studied later, but I understand the fundamentals. I know how companies get valued. And so when companies are beating estimates, that's when Wall Street is more likely to change their future estimates and raise their guidance, raise their estimates going forward. And when you raise estimates in an interest rate environment where we're near 0 on the 10-year Treasury yield, PE ratios go through the roof. And that's what a lot of people don't understand. I can't tell you, that's probably the most frustrating thing for me is when I read articles, no matter where, I read articles and it's like, well, the market's overvalued. The S&P 500 PE is at 22. That historically is overvalued. Well, maybe, but when interest rates were 7% back in year 2000, there's no way you're going to value companies the same way you would in this environment. So I think that the low interest rates, we're going to start moving higher in interest rates. And when we do, it's going to be because people are selling bonds. What are they going to do when they sell those bonds? That money's going to pour into the stock market. And I see it coming. I think we're just at the tip of the iceberg right now with this bull market. I think we're going a lot higher. I actually said on my Thursday morning show, Trading Places Live, that I think by the end of this decade, we're going to be at a minimum of 10,000 on the S&P 500. We're under 3,400 right now. I see us tripling minimally in the next 10 years. So if I'm right, and these companies that are growing earnings, you continue to follow this strong earnings, these chart lists and stuff, you're going to outperform. You're going to do really well, because beyond the next 10 or 12 years, I think when people start saying Great Depression 2.0, now I'm not predicting it, but I do think when we get into the 30s, it's pretty interesting when we look at history. We had a pandemic in 1917, 1918, which is almost 100 years ago. But most people don't realize, the stock market went up 30% in 1917 and went up 10% in 1918, or maybe vice versa. I'm not sure which, during the pandemic. And now everybody seems shocked that we have a pandemic and we're higher. It's like, well, we did the same thing 100 years ago. And then after the pandemic, we actually went up about another 11 years until 1929. So after the pandemic, that would take us into the early 2030s.
The most amazing thing is when you think about it, the pandemic hadn't happened. Boy.
Oh, yeah. Well, I said we would have been at 4,000. I'm not sure. We still don't get there. I think fourth quarter, we could still get there.
I'll tell you something. That happens. I'm literally going to come to your place and I'm going to just, shake your hand.
Well, we'll see.
Or at least pump your fist or something.
Yeah, and I didn't
All right.
go over this. I didn't go over this earlier, but I just want to point this out. Anybody who hasn't seen this chart, this is why I'm so bullish. The market goes through periods. I don't care what's going on politically, what's going on with interest rates, what's going on with, this, that, earnings, blah, blah, blah. We go through periods, usually 12 to 13 years, where we go through secular bear markets. You can see it. I mean, it was back in the 30s and 40s. It was in the 70s into the early 80s. It was from 2000 to 2012, 2013. I mean, look at them. They almost look identical, the patterns. But when we break out, we go through 2 decades of secular bull market action. And right now, in this secular bull market, through April, we had only averaged going up 8.75% per year, which is nowhere near what we did in the last 2. I think we got our best years ahead of us. And a lot of people think that, we can't go any higher. This is it. Well, I guess we're going to find out who's right and who's wrong. But I think we're going a lot higher, and I think this is going to continue to point up. And I wouldn't be surprised, again, to see at least 10,000 on the S&P 500 in the next 10 years. And on that note, is that it?
That's it. We're wrapping up. Great job. Everybody's going to get a copy of the recording. Give us a little bit of time to get it to. We've got to go through it, edit it, and then we timestamp it. Aaron actually listens to the whole thing, stamps, where Tom started with something, ended, so it makes it easy for people to key in on those areas that are of interest to them. But as soon as we get that ready, we'll get it out to everybody.
All right. Sounds good. Appreciate it. Thank you all for coming by and checking it out. Hope you enjoyed it, and happy trading.